in most entrepreneurs that I speak with, they focus on profit. And of course, profit is super important. Some talk more about revenue, but revenue is overrated. The number one thing that they're undervaluing and ignoring is cash flow. So if you have an agency and at the end of the year, on paper, you have $1 million in profit, but you still have $2 million in receivables outstanding because your customers haven't paid you yet, you have a really, really big problem.
Rob Te Braake, welcome to the ROI Online Podcast.
Amazing, right?
So Rob, I'm an agency owner, I'm a business owner, and yet I struggle probably with a common insecurity that most business owners have. And that's like, there's all this data available to me in many areas, but I don't feel confident all the time that I'm taking advantage of it. And yet that's what your company, Insight Matters, helps folks like me, agency owners, actually do that. I can't afford to build a team, but yet you can help me cross that bridge, no?
Yep, that is correct. In essence, we help agency owners with who don't need or can't afford a full-time CFO. We help them get 80% of the value of a CFO at basically less than 20% of the costs. So we give insights based on financial data, based on financial reports that help you make the better decisions to identify where you're making a profit, where you're making a loss, and where you can improve.
So your accent betrays you. You're obviously not from Texas. Where are you calling in from today?
I am Dutch, and yes, my accent gives that away, but I am calling in from Budapest in Hungary today.
Excellent. So you work with agencies all around the world, correct?
That is correct. Mainly based in the US, Northwestern Europe, and some of them are fully remote, so they could be based anywhere.
Right. So you started in banking in the Netherlands, and you also spent some time in China. Give us a little background. Let's establish some authority here.
Yeah, I started my career in a Dutch bank in their global talent program. Did a couple of projects in the Netherlands. They sent me to China, and after 6 months, the bank told me to come back to the Netherlands. And in those 6 months, I had fallen in love with Beijing, China, because the energy, the drive, the entrepreneurship there, it was addictive. So I did what any sane person would do, is I quit my job and decided to stay in China. Together with a partner, launched a technology and investment company. So we bought technology rights in Europe and built companies with that in China. Did that for 7 years, and then finally came to the conclusion that as a small foreign-owned company in China, unless you have really, really deep pockets, there's no way you're going to be successful there. So I decided to call that a good learning experience, step out and get back into finance, where my love and my passion is much more than on the technology side. Started initially as a consultant for a couple of e-commerce businesses, a couple of SaaS companies, a couple of service providers. And along the way, I realized that the companies that I like to work with are the smaller ones, where you work directly with the owner, because it's usually the owner who has the passion, the drive. And that's exactly why I stayed in China. But those companies couldn't afford my consulting rates. So that is where we initially started Insight Matters, because we want to work with those companies. That's where we can add the value, but we need to do that at a price point that's fair and realistic.
So how does someone fall in love with financial stuff? That just doesn't seem sexy, but yet it's really needed.
It is sexy, because if you want to have a marketeer talk with a product developer, if you want to have a customer talk with your admin girl, the only language that combines every single aspect of the business is the financial one. It's like the spider in the web that communicates with every part of the business, and it allows you to see where you're doing well, where you're not doing well. if somebody has great plans, it always has to translate into a financial number. So as a marketeer, you probably express the success of your clients in how much extra revenue they're doing, or how much the cost per click or their customer acquisition cost went down. Those are all already financial.
Yeah. Why is it that that's so hard for a small business to really get really excellent at?
My experience is that it's very difficult for business owners to really dive down on this because they're experts in their domain. They're the product developer, they're the marketeer. That's where they're trained, that's where their passion is. And finance is often an afterthought, or it's the one thing that they also have to do that would enable them to get to the next level. But indeed, most people don't find it sexy. So it's not something people like to invest in. For most people, it's much more interesting or much more sexy to focus on a new campaign or a new creative or getting in that new client, rather than maximizing the value of your existing clients.
Yeah. It means that you're going to have to like take this data and put it into some sort of ledger, generally some software. And that's intimidating. You don't know which one's the best one. Is it QuickBooks? Is it what other software do I need to connect to get really good, clean, accurate data?
So there are several layers here. In the most basic, what you need is a bookkeeping system. And that is indeed Xero or QuickBooks or Sage, or there's a bunch of them out there. That makes sure, if you have a good bookkeeper, that allows you to see what has happened in the past and that everything is recorded. But that's like the raw data. That doesn't give you any detailed insight yet. So you can connect a CRM system on that. You can connect your time tracking on that to already add a little bit more quality to the data. But what we do is we take the data from the bookkeeper, we translate that into the KPIs that we set with the clients. So we look at a bunch of KPIs that are specific for your agency that will drive your success to your goal. And then we take the data, visualize it, and report it, and analyze it, and come up with the advice based on the data that we see. What should you be doing? Where should you be putting your effort, your time, your money to get closer to your goal?
Why is it that you specialize in agencies? Can you find an industry that was less dysfunctional?
Isn't that exactly why it's the most interesting industry? No, the reality is a bit more pragmatic, because one of my first clients was an agency, and the difference that we saw we could make with them by pushing them to do their time tracking better, because that's the number one problem often. And the quality of the data that he would get before us and with us, and how that impacted his business decisions, that was a really good reason to focus on agencies. So more specifically, that was a website agency who had a lot of clients, on paper had good margins, no cash in the bank. And after we came in, we visualized the data, we agree what the priorities are, we set the targets. Conclusion was very simple, that they were underpricing, they were too inefficient, so they were spending way too much time or over-servicing some of the segments, and they were absolutely horrible in collecting client payments. So after those three things were fixed, business profit went up, cash flow improved, owner had less stress, and seeing that result is what makes us really happy.
Why is visualization of data so impactful?
Most people, if you give them a big piece of paper full of numbers, it's like a wall of numbers. You don't see anything anymore. Visualizing the data is what brings out the value. It is where you can hammer home one particular message. You can see in this whole range of data, this is the trend. These are the patterns. And we work with a software that allows you to make the charts interactive. We can zoom in and zoom out on specific data points, specific trends. That hammers home the message so much more clear than 5 numbers in a row or a whole wall of numbers. That's just not how people think, and that's especially not how creative people think.
So you just talking about KPIs, key performance indicators. What are like the top 5 KPIs that an agency generally has messed up or not clear that you get them dialed in with immediately?
Well, the one they let's say that revenue is clearly one of the most important ones. That is the one that people are usually dialed into. Overall gross margin is where it goes wrong already. If we're looking at gross margin per client or per project, I have not seen an agency where that goes without flaws. Operational cash flow, so the net cash flow that you get from running your business, so all your client payments minus all your normal expenses, that too is one that people don't look at, or at the very, very least undervalue. The fourth one that agencies don't manage and should be managing, customer acquisition cost. I've seen too many agency owners pitch a project looking only at their cost of delivery and completely ignoring in their calculation their acquisition costs. And finally, I would say lifetime value of a customer is very, very critical as well. So how much revenue or margin are you making on a client or a project over its entire lifetime?
So let's talk about the cost of acquisition. Give me some, enlighten me.
Well, happy to enlighten you, but where to start? Because acquisition cost is super specific for each company. It depends on your marketing strategy and on your service and your ticket price and your lifetime value, what a good acquisition cost is or should be, not is. If you're having a content-based strategy, your acquisition cost should be relatively low, but your growth is also going to be slow in the beginning. If you work with a pay-per-click, like Facebook ads, Google ads kind of acquisition model, your acquisition cost is in general going to be really, really high. How high depends a bit on your niche, on how efficient you are or how creative you are, and how good your conversion is. But in general, it's going to be much, much higher. Now, if you have a high acquisition cost, but you bring in customers that stay for the long run, that's perfectly fine. That in 9 out of 10 cases, that's sustainable. If you have a high acquisition cost, but you do one project with them and then you lose them, you have a problem because that's not sustainable. You're not building up any value, so you're investing a lot, but you're not harvesting.
Yeah, I found that. So the acquisition cost, generally, if it's a content-based, meaning that you're producing interesting information that attracts a better fit for your agency, that takes a lot of thought and strategy and time to deliver. And you're right, you don't have a bunch of people calling you and your phone's ringing off the hook. But that type of client seems to have a better or longer lifetime value. But when you're running a bunch of ads, you're getting a bunch of tire kickers. And if you're not careful, you can bring on a bunch of business that can tax your agency with a lot of misbehaving and ill-fitted accounts.
Yeah, although there I would say it also depends on the quality of the marketeer, but that's more your expertise than mine, that if you are addressing the right audience with your campaign.
You know, the type of work that an agency generally does, it should be more of a long-term relationship where we're developing out campaigns over a long period of time. And so if you're just doing little one-off quick flips on a website or something, maybe a pay-per-click ad campaign makes sense, but there's a lot of people doing that and there's a lot of competition, and the lifetime value is going to go way down.
Yeah.
But for example, I wrote a book. So you think about setting up the reasoning and convincing yourself you need to write a book. Why do you need to write a book? Because I noticed that the clients that buy into our philosophy and the way that we approach, they stay a long time. And so a book can do a lot of that acquisition footwork, if you will. And people that read the book, then the conversation is more around, hey, how does adopting your philosophy look in my situation, as opposed to convince me on why I need to do this?
Yeah. So that is selecting the right customers. And if you manage to address the right customers, acquisition cost goes down, lifetime value goes up, and that means net profit goes up.
Mm-hmm. So the talk to us a little bit about the tools that you like to get one of the struggles with the small business is collecting accurate data and depositing it somewhere where it can be set up in a nice visual format that delivers true information. Talk to us a little bit about that process.
What we do is we start with the bookkeeping data. And for clients that don't have the bookkeeping in order, we do that as well. But because everything, that's the foundation. That's I would say in IT terms, the data warehouse probably, although don't pinpoint me on that. The quality of that data is critical. So where that data comes from needs to be good. And of course, the bank statements, etc., those are easy. The number one problem with data quality on the agency side is how does your team spend their time? How much time and therefore cost do you actually invest in attracting new clients, but also, or even more important, in delivering for each of the clients or each of the projects? If you don't know how much time you're spending on that, you don't know if you're profitable or not. So that data quality is critical. And for us, it doesn't really matter if you use Time Doctor or Toggle or Harvest, as long as you are consistently using a time tracking tool with your whole team that secures the data quality. On top of that, we use visualizations. We use Clipfolio because it's easy to integrate and quite user-friendly for our clients. But that you could use any dashboarding tool, any visualization tool that you want. Depends on your level of sophistication. Now, back to the time tracking, because that is 9 out of 10 times the bottleneck. My experience is most people that work in agencies are creative. And if there's one thing creative people don't like, it's tracking time and those kind of admin tasks. So it is critical for you as the owner or the founder or the managing director to explain to the team why it's so important to, at least at a high level, track how the time is spent. It's not to micromanage the team. It is to see which clients are actually the better clients. Who are the ones that you're underserving? Who are the ones that you're overserving? Who are the ones that pay least but consume a lot of your time? Like, that is really basic data you need to have to make the decisions on how to renew your retainers, how to put your pricing in line for certain clients, which direction or which niche you want to focus on. It's really foundational information.
Yeah, so imagine having a team that hasn't been used to documenting their time super accurately. Maybe it's more in general that they document their time at least to get paid, especially if they're contractors, right?
Yeah.
Help us agency owners see how you can help someone make that transition to where the folks adopt a new way of doing things. Obviously, you need to sell it. Obviously, you need to convince them of the value of it, but that's a hard sell, isn't it?
That can be a hard sell. What we have seen work best there is a carrot and a stick approach. So the carrot of having a bonus for the whole team, or having a team trip if everybody does this, tracks their time, etc., helps a little bit. I've even heard the stick works often better, but is more harmful for team culture. I've actually heard about one agency where the finance person, the admin person, would print out a picture of a gun on a piece of paper, and on that day of the month where everybody had to hand in their timesheet, she would put that picture on the office door to kindly remind everybody to fill out their timesheets. Now, that was done with a lot of humor, and that was appreciated, or that worked. So you have to be a little bit creative and balance really the carrot and the stick. Explaining why it's so important goes a long way, but it's not enough usually.
Yeah, when you talk about the lifetime value of a client, the other side is the lifetime value of a great employee or contractor that continues to show up and do great work and really relate with your employees. And when you're trying to change a documentation method, that feels sometimes a little risky. You don't want to demotivate them. You want to motivate them. And you would hope that if their internal values were the same with yours, they would want you to succeed and understand that this is an important metric. But in a real world, there's more at play.
There's more at play, but I'm tempted to say, if you have a great employee that delivers great value for your customers, they will understand that it's important to understand which customers are the good customers and if they're doing the right things. And I'm going to say that probably the customers that the team is very happy with are also more likely the ones that you're over-serving. And that's not necessarily bad, because you're delivering a great service to them, but it doesn't mean that next time you're renegotiating the retainer, keep that in your mind and either up the scope, up the retainer, or charge extra hours for the over-servicing. But it doesn't make a lot of sense that you subsidize your clients just because they are a nice client.
Yeah, excellent point. So we're talking with Rob Te Braake. His company is Insight Matters, and we're learning about how agencies can become more efficient, more profitable, and connect better with clients that give you great lifetime value. And so if you're watching on YouTube, be sure to subscribe. And all the kids say like, and all that stuff. So I guess I'm supposed to say that as well. If you're listening, hey, go find us over on Vurbl, VURBL.com. That's a great platform. If your podcast is not in there, you need to get set up. Okay, Rob. So I have some questions. I like to know what everyone's asking, what questions they're asking around your industry. So these may seem a little general, but yet they're very important. So you're an expert. So here we go. First question I have is how to make better business decisions.
The number one thing you need to know to make a better decision is, what are you trying to achieve? What are you optimizing for? What is the goal that you have in mind? If you don't know that, you can never make the best decision, because you don't know which path you're taking if it's even remotely in the right direction. So making better decisions start with the goal in mind, and then understanding which road gets you there. And of course, from our perspective, the road that gets you there is which KPIs get you there, which key performance indicators. How do you measure that progress? And then you look at the decisions that you can make. How will they impact that particular KPI or that particular KPI? It's very hard to see the impact from one decision on the overall goal, because that impact is usually too indirect. So break down that goal into small steps and measure the decision based on those KPIs.
Excellent. Okay, so how does financial data influence business decisions?
financial data doesn't influence the decisions. It's 90% of the decision. And that is not because it's only about the money, but every aspect of the business has a monetary component or can be translated into monetary components. So financial data, if you're looking to launch a campaign and you compare two alternatives, how do you compare them? You look at what is the revenue that we're going to get from these? What is the return? How much do we need to invest and what do we get? Having that data available, both for forward-looking campaigns that you're planning, but also to evaluate past campaigns that you have done, that is 90% of the decision-making. So understanding the metrics, understanding how to interpret the metrics, that is the decision-making.
Excellent. So in your perspective, are digital marketing agencies profitable?
Digital marketing agencies in general that I see are profitable, but not as profitable as they could or should be. So yes, they are profitable because they work. I'm not sure if this is appropriate in your show, but because they work their asses off. But they leave a lot of money on the table by over-servicing, by spending a lot more time on admin than they should, while they could be spending the time on business development, for example, by underpricing. They leave a lot of money on the table.
Excellent. And yeah, it's appropriate because all the folks that listen to this, they do work their asses off.
I'm not surprised. To be honest, that's one of the things what I like about agencies, about agency owners. They're super passionate. They work harder than any other group of entrepreneurs that I've seen.
Wow. All right. So here's the last one. How to manage a marketing agency.
How to manage? From the finance side, that's of course how we look at it. You manage a marketing agency by making sure the data foundation is in order. So that is, you understand who your clients are, how much your time you're spending on servicing them, how much you're charging them for that. And on a more higher level, you want to manage an agency by reviewing your financials every month. So look at your P&L, look at your balance sheet, and especially look at your cash flow statements. Your bookkeeper should give them all to you. If they don't, send me an email. I'll talk with your bookkeeper. Reviewing those three every month, and ideally the KPIs that help you get to your goal to see if you're progressing. Now, if you don't know what your goal is, take a weekend off, spend some time thinking about what are you trying to achieve with this business. Is this a lifestyle business? Are you trying to build a 9-figure agency? Like, what is the objective here? Work that down into the milestones 3 years from now, 1 year from now, 3 months from now, next month. You can go to next week or tomorrow and the next hour. And understand how to measure that progress. And then every month when you review your financials, check with your goals, with your progress. Are you on track? Where are you on track? Where are you behind? Where are you ahead? Where do you need to adjust course? That's how you build and scale an agency that helps you achieve your goal.
When's the best time to sit down and get your financial act together as an agency?
Yesterday. If you haven't done that yet, then do that as soon as possible. Now, of course, I would recommend everybody to have a dashboard with the key KPIs and have that fully organized, because we fundamentally believe in the value of that. If that's overkill for you, make sure your bookkeeping is in order, and look at your P&L and your cash flow statement. That's that is foundational for it. If you don't have that, you're basically swimming. You're floating in the air without knowing if you're making money or not, if you're profitable, if you're sustainable or not. You would not be the first agency that looks at the revenue, thinks you're doing great, while at the end of the year, it turns out your bank account is empty. And that's not necessary.
Yeah, I think a lot of agencies struggle with that and they don't need to, do they?
No. There will always be agencies that struggle with their financials because they're in a tough spot for whatever reason, but nobody has to struggle because they lack the insight.
So if you're watching, we're talking with Rob Te Braake. He's his company is Insight Matters. He's in Budapest right now, and he's dropping some good wisdom for agency owners and business owners on how to take advantage of the financial data that you actually have laying around your company that could be helping you make better decisions. So, Rob, why is it that the Netherlands seems to be like the center of banking? What's going on there? What's the history?
To be honest, I don't really know. My understanding is that we have a very rich history in international trade, and rich, let's call that in the positive side, but also on the negative side. And in that international trade, finance was a key part to facilitate it. The VOC, the Dutch East India Company, with I'll put it very, very politely, a mixed track record, was basically the first publicly listed company. They basically invented the issuing of shares to raise money, split the risk, etc. So I think that the Netherlands has a culture of trade, and finance is critical in that.
Excellent. So what's the one question that you wished podcast hosts like me would ask you so that you could really get to talk about what you're passionate about?
I don't know how to phrase it as a question, but I will tell you what I want to rant about and rave about because it is so important. In most entrepreneurs that I speak with, they focus on profit. And of course, profit is super important. Some talk more about revenue, but revenue is overrated. The number one thing that they're undervaluing and ignoring is cash flow. So if you have an agency and at the end of the year, on paper, you have $1 million in profit, but you still have $2 million in receivables outstanding because your customers haven't paid you yet, you have a really, really big problem. So next time you're discussing the retainer with your clients, don't only focus on the level and your margins, focus more than ever before on when will they pay. If you can, don't accept net 30 or net 60 and they're still going to overrun anyway. Get them to pay up front. If you have to, especially if you have bigger clients, it doesn't make any sense to me that you as a relatively small agency are financing your bigger customers. So the timing of when your customer pays you is as important, or in some cases even more important than the price level that you realize with them.
Excellent answer. You know, small businesses, they generally are underserved as far as access to credit, access to capital.
Yeah.
What are some suggestions or ideas that you have?
The preferred route, but again, not everybody can achieve that. By far, the preferred route is let your customers finance you. That financing is essentially free. So prepaying customers are the best, the cheapest, and the most scalable way of financing. For agencies, it's relatively difficult to get access to other sources of funding. For e-commerce, there's all this revenue-based financing, inventory-based financing. For agencies, if you have a relation with your local bank, that is often still one of the better places to go. They're old-fashioned, they're archaic in the processes, but they're still relatively cheap. And if you get access to it, a really good way of funding. The one thing I want to warn about is credit cards. if you play the credit card game and you have the discipline and ability to pay back on time, it's a good way of, let's say, getting 30 or 60 days of interest-free financing. But if you mess it up, you're going to pay 20-30% interest on an annual basis. So I am always very reluctant to when I see companies use credit cards to finance their business.
Excellent. So the number one best source of financing is to invoice upfront and collect immediately.
Yes. And if you can, get a deposit from your clients. Some of our clients manage to get a deposit and the customer pays upfront. That covers their working capital. They have no cash flow concerns because they have the full money upfront. Only when the relationship with the customer ends, they need to pay back the deposit. But if you deliver good service and you have a good relation with your client, that's going to be years out.
Yeah. Rob, you've been an excellent guest on the ROI Online Podcast. So if folks are listening, they're going like, I wonder what it's like. I don't know if this is what I need. What's it like working with you?
Well, I'm going to say, of course, it's a pleasure working with us. Now, what is it like working with us? We always start with a lot of questions. We start with a game plan, and that is we want to identify what is your goal. What are you trying to achieve? Because anything we do, any advice we give is based on where you want to go. Then we break that down into KPIs. So if you want to sell your company in 3 years, what are the steps that you now need to take? And what are the metrics we need to manage to get you there? And then we look at how do you need to adjust your bookkeeping and your internal processes so that you can actually measure those KPIs. That is where we always start. That is often a very insightful, sometimes confrontational process. After that, we build a dashboard, and on a monthly basis, we analyze the numbers, give you advice based on the metrics that we see. We run you through in a video, run you through the whole report with the context, the colors, and connect all the dots in there so that you can still spend 5 hours analyzing the report, or you can just look at a 20-minute video and get 90% of that value as well. And then we guide you, depending on how much you need, hands-on or hands-off, in actually achieving those goals.
How can they connect with you, Rob?
The easiest way to connect with me is to go to connectrob.com. And if you want to read more about Insight Matters, it's financeinsightmatters.com. And if you are interested in the game plan that I just mentioned, then go to financeinsightmatters.com/ROI Online, because that is where there is a nice hidden, well, not hidden, that's where there's a nice discount for the game plan.
Awesome. See, you guys listening, you get all sorts of value, not just all my super wit and wisdom, but our guest. And then here's Rob giving you a bonus as well. So connect with rob.com. Is that what you said?
Connectrob.com.
That's smart. So, all right. So let's repeat this special. Tell us again, what's that URL?
financeinsightmatters.com/ROI Online.
ROI Online, return on investment.
Exactly.
Coming at you from all angles. Rob Te Braake, man, I've enjoyed it. You've been a great guest.
Thank you. It was a pleasure.
All right. And that's a wrap.